A CPI surprise buoys markets and BHP gets acquisitive. You're listening to Kitco Roundtable. I'm your host, Michael McCrae. Kitco correspondent Paul Harris is in. How you doing, Paul?
Hey, Michael. Very well, thank you.
And with most quarterlies out this week, you couldn't ask for a better guest who can read the tea leaves. It's Joe Mazumdar, editor at Exploration Insights. How you doing, Joe?
How's it going, guys?
Exploration Insights is an excellent newsletter looking at the junior resource space. Joe was formerly an analyst at Newmont, knows his way around quarterlies as well as rocks. Joe, before we get down to it, what's been your favorite work trip since the travel has come back?
Well, I guess I haven't had a favorite, but I must say that the level of work trips, site visits has gone up quite a bit. Comparing this year to last year. Last year was a little bit more restricted to within Canada. But this year, it's been much better to get around to a lot of sites internationally. That's been probably one of the biggest changes from last year to this year for me.
Paul.
I think for me, it was the site visit to Ero Copper in, I think it was in April, traveling around, visiting their sites in the Carajás in Brazil. It was a very long trip, but we saw a lot of good stuff.
After Kitco covered sore financials, Deutsche Goldmesse in Frankfurt, I had a layover in Lisbon, a city I never would have considered visiting. The city and nightlife is just absolutely charming. Let's turn to macro. Probably one of the top headlines this year was a CPI number released on Wednesday, which marked a turning point in the markets. U.S. consumer prices were unchanged in July. The consumer price index was flat last month after advancing 1.3% in June. The Labor Department said midweek. A drop in oil prices was credited. It's just 1 month of data, but there was a sea change. Money came back to the beaten up tech sector. The NASDAQ was up 1.51% for the week. Beaten up copper hit a 6-month high on hopes that the Fed will stop tightening. It finished the week at $3.70 a pound. Although gold is the inflation trade, it has taken down in the last couple of months, but it rose this week. Gold shot through 1800 on the CPI announcement and finished the week in the 1790s. And oil, well, it's currently trading at the low 90s. Paul, what's the mining headlines?
Well, the big headline this week, Michael, was diversified miner BHP, which made an 8.4 billion Australian dollar unsolicited cash takeover offer for Australian mid-tier copper gold producer Oz Minerals, which has mines in South Australia and Brazil. It expects to produce about 120 to 135,000 ounces of tons of copper and over 200,000 ounces of gold this year. Despite the 32.1% premium offered, Oz rejected the offer, saying it undervalued the company as it has traded above the offer price for 5 of the past 12 months. I imagine there's a lot more to come before this plays out. In Colombia has got a new president called Gustavo Petro, and the first thing he did was filed a new wide-ranging tax reform bill with Congress, which aims to raise some 25.9 billion pesos next year to reduce the fiscal deficit and provide additional funds with which to begin executing his social program. The bill includes a 10% export tax on oil, coal, and gold, as well as taxes on sugary drinks, processed foods, a progressive carbon tax, and a tax on single-use plastic. In Chile, Chile's copper production fell 6.2% in the first 6 months of the year to 2.6 million tons from 2.8 million tons a year ago, according to state copper agency Cochilco. Cochilco also said that worldwide copper production increased 1% during the first semester of the year to 8.8 million tons, although all the major producing countries, Chile, Peru, China, and Australia, except the US, saw production fall. In a horrible week of June quarterly financial results, Barrick Gold was something of a standout, reporting an 18.7% increase in net profit to $717 million US, boosted by copper production of 120 million pounds, which was 25% higher than the prior year period. Its gold production was just over 1 million ounces, slightly lower than last year. Its all-in sustaining costs increased 11.5% year on year and 4.1% since the March quarter to $1,212 per ounce, but it reiterated its full-year cost guidance. Finally, troubled miner Pure Gold Mining announced an updated resource estimate for its pure gold mine near Red Lake in Ontario here in Canada, which includes an indicated resource of 1.65 million ounces of gold, grading 7.4 grams per tonne, and another 370,000 ounces of inferred, which lowered the tonnage, ounces, and grade from its 2019 estimate. This resource will form the basis of a new pre-feasibility study and updated life of mine plan, which is expected in the December quarter. Pure Gold saw its market capitalization crushed from about 1 billion Canadian dollars less than 2 years ago to about $69 million now due to startup difficulties.
Let me sneak in a promo. We're going to have an interview with Pure Gold coming this week where we're going to be talking to interim CEO Mark O'Day. Joe, I'd like to bring you back. Paul was talking about Barrick and the surprise beat. Looking at the Q2s, the theme that I've been seeing with the gold miners is that looks like copper is coming off the boil, which was really kind of a nice kicker for them. They really reported how would you say, the full effects of the high inflation numbers, but people, at least some of them, are projecting that the inflation numbers seem to be receding.
Well, I looked at some financials for Q2, and it was about June-ish that the oil prices started falling. And obviously, as you guys know, the oil prices, diesel has a big impact on a lot of the mining costs. So they're seeing a bit of a reduction there. Some of them have also seen weaker currencies as well, which helps. That's another aspect. But I don't see some of the inflation pressures of getting parts, reagents, that sort of thing, and labor availability. Because COVID, even though some people think that it's over, my son just got it a couple of days ago, one of my kids, and so it's not really over. But that happens to a lot of mines still in South America and other places that impacts availability, and so we've been seeing that sort of issue. You got to go to the bathroom there, Paul?
Although the second quarterlies, in some ways were pretty dismal or weren't received well. When you sort of actually look at the numbers and crunch the numbers, for the major gold producers, they're still in a very healthy position. Their aggregate cash position increased in the quarter. Their aggregate debt position decreased in the quarter. It's a similar story for the intermediates, although they seem to be more impacted by the inflation environment. Cash is more or less the same, a little bit down, debt's a little bit down. So things still seem to be sort of quite healthy in the sector.
Yeah, I agree that the balance sheets there for most companies, gold companies, is much better than it was in another downturn in the cycle. But I guess what we got to remember is it's really the margin that people are looking at. And if that margin, like you said, with the CPI going flat, oil prices coming down, if people can see that there's hope for a margin expansion going forward, then people might return to the gold market, because the valuations are certainly there where people could take portions. They just want to know that weakness in margins is now has run its had its run, basically.
Just to add on, regarding labor costs, this might be a permanent, how would you say, permanent fixture, a permanent drag for the miners. What has happened with COVID is that a lot of the labor force, certainly the older labor force, has decided to retire. And if there's anything that we know about mining is that most of the people in it are old, because it has a difficulty in terms of actually be able to bring new people into it, just because of the commodity cycles. And look, there's also been a lot of other sectors that have gotten much more interest. Joe, interested on your thoughts on the Goldfields and Yamana deal. It was kind of goes on from what Paul was saying before, and it's what CEO Chris Griffith reiterated in an interview that I did with him on Wednesday. He was talking about that, the gold miners really are in a good space right now. They've had those high prices. They're on a good footing. So it was kind of a chance for him right now that the company could say that you could look at some consolidation. He was also saying that, he wants to head off consolidation or get ahead of it at this time, thus doing the large deal with Yamana.
Yeah, it's funny saying you want to get ahead of consolidation. Yamana's been on the block for as long as I've worked in the industry, almost like I remember when I was at Newmont, Yamana was on the block. Yamana's always been a seller. So to get ahead of buying Yamana is not I mean, that's kind of an interesting statement considering that's been on the block for so long and nobody's wanted to acquire it. This the Yamana Goldfields deal, it is similar to me to the Goldcorp Newmont deal. It's only consolidating to consolidate, big just to get bigger. And that might be the way to go with respect to liquidity, with respect to market cap, with respect to balance sheets, and the ability to get on that tier with Barrick and Newmont. But there's not a lot of synergies there. Like with Barrick, before they got Randgold and before Newmont got Goldcorp, they insisted on the synergy that we've been looking for and they'd been looking for almost 2 decades in Nevada, and that synergy happened, which is unleashed a lot of cash flow in that area. Yamana and Goldfields is similar to Goldcorp and Newmont when there's not a lot of synergy. The only real synergy is corporate G&A.
Paul?
So the $64,000 question there is then, Joe, does Yamana have better assets than Goldcorp had?
Yamana's got some real prize assets, and I say their proportion of Canadian Malartic is really the gem, the jewel in the crown. But I would say, like, if you looked at that slide that they have about what Goldfields is bringing to the party and what Yamana's adding, most of the near-term metrics are all Goldfields. Goldfields merger with Yamana does not improve much their near-term metrics in terms of cash flow, earnings, whatever. But long-term, if they can make this one asset, which is Agua Rica, if they can ever get that going, Glencore is keen because Bajo de la Umbrera has a plant, and that's going, they stop mining there, and then they would have to get into reclamation. And to avoid reclamation, they could keep feeding material potentially from Agua Rica, which would have been a different plan than previously. Agua Rica's got a lot of development problems because of its proximity to the town of Andogala and the river and that. I visited it back in the mid 90s when BHP had it. So that's a big deposit. That's a big porphyry copper gold deposit. So if ever that can happen, that would be huge for Goldfields to take part of it. Other than that, I don't see a lot of synergy, underlying value in the other assets.
What Goldfields is buying is pipeline, because you've got the expansions at Canadian Malartic, you've got the Wasamac project that's coming up, and as you mentioned, the Agua Rica in Argentina. They're buying a pipeline beyond.
Yeah, but Wasamac is not a great asset, let's say. From Goldfields' perspective, it gives them a little bit more geopolitical diversification, gives them more in Canada. And that's probably a good thing for them. I don't argue that the growth is really what it is, but I think it's really contingent on if Agua Rica works or not. Near term, it's definitely Malartic. But let's just remember that this thing's been on the block for a while, and everyone's looked at Yamana.
Any value that can be put on having a higher presence in the North American markets? I mean, Yamana and Peter Marrone is certainly well known there, whereas Goldfields you always kind of associate more as an African miner, Joe. Although, what is the value you put on that?
Yeah, I take umbrage with that because I think in South America, Goldfields has done a good job. They found a really high grade large deposit in Chile, with their exploration team. They've got a good presence in Peru. So they've been diversifying, and Goldfields year to date, before they announced that merger, was doing pretty good. This is a little bit, I think, a bit of a personality, or, where a new CEO comes in, wants to make his footprint on the company, says, consolidation is where we want to be. We want to be bigger. Here's something that's available. Let's make it work. And they did it. I personally don't see much value in the consolidation, because if we're looking for more gold production, that's not what's happening here. All we're doing is, moving things and putting them under different people. From Gold Fields' perspective, Paul's point in terms of geopolitical diversification helps. So if people are discounting Gold Fields, they would like the diversification that comes with having more stuff in Canada.
At the start of the podcast, I mentioned the CPI number, which I think is really going to be a reset for the rest of the year. It's mid-August that we're recording this right now. Joe, as fall is almost upon us, what's the trends, or what are you looking at? What's going to be most important for the remainder of the year?
I think the thing is that people gotta, they're in the doldrums of summer right now, and then we were going into this inflationary environment, shrinking margins, and all this stuff. But then the underlying themes are the same, where people are talking about critical minerals, people are talking about market segmentation, about where are we going to get these minerals from. That hasn't translated in terms of people developing new projects or getting permitted, stuff like that. So I'd really like to see how that, critical minerals idea translates to actual action, because we could talk about critical minerals and it's not like a lack of these minerals in North America. There are, North America, the Americas has a lot of these minerals. The problem is, permitting and developing these projects is an issue, whether it be Chile, whether it be Peru, whether it be the States. The jewel in the crown there is basically Canada with respect to permitting.
I just to add on to your point, Joe, I'll get to you in a minute, Paul, but also looking at what you can do with the processing of critical minerals, especially with lithium, because as you transition out of salars into direct lithium extraction, there was the what was it, $500 million investment in Energy X is one of the people that are actually trying to solve this. But looking at if you can actually bring that up to, how would you say, a commercial scale production, which they all say, and then Elon Musk has said over and over again, bringing these things up to scale is incredibly difficult.
Well, I'll say that's not just for lithium. That's for everything. If you want to develop a copper project in the States or Canada, you're usually going to produce a copper concentrate. Where does that copper concentrate go? 60 or 70% of the smelter capacity is in China. It's going there. And if you're lucky, you'll get it back a car. You're not going to get cathode. So that's another conundrum of this entire critical mineral theory that people are pushing, is that, one is trying to permit development of projects, but then what product do you actually get? You do not get the product that you're going to use in manufacturing. You're going to get the product that you still have to smelt and refine, which you have not built any refining capacity in North America.
Yeah, same for the people like at Canada Nickel, FBX Nickel as well too, because they just don't have a place where they can actually process what they produce. Paul, your trends that you're looking for?
Yes, no, I think this is starting to really have some sort of real geopolitical dimensions to it, and showing the sort of limitations of, in some ways, the democratic society and government versus that of centrally planned economies, because you've got Russia and China. Their governments can do basically whatever they want. They can build new capacity, they can build new mines, they can build new processing facilities. They don't really have the NIMBY issue that is present in Western societies. And so that's one of the things that, despite the fact that governments want the minerals and the energy transition, getting projects permitted oftentimes still comes down to whether your local neighborhood wants the mine or not. The exceptions historically been when there's a war setting and you've got the War Act or the Defense Act that really can push things through.
I think what I'm going to be looking for is just how busy the shows are going to be. So we have the Denver Gold Show, as well as Beaver Creek that is going to be coming up in September. And depending on how many people actually show up to those things, it actually shows you how optimistic people are for the event. Let's turn to our number of the week. Paul, what's your number?
I've got a couple of numbers from both sides of the Atlantic. My first is 13, 13% more precisely, and that's the anticipated rate of inflation the UK is expected to see in October. And on this side of the Atlantic, 87,000. And that apparently is the number of new jobs being created by the IRS in the USA. That's the Internal Revenue Service. So many more tax inspectors coming in.
My number, and it's also one of my trends that I was looking at, is 600 yuan. Once again, that's 600 yuan. Apple announced a rare discount for its phones. Very few companies know China as well as Apple, and the country is facing a lot of economic turmoil. Tim Cook, of course, managed supply chains in Asia before becoming CEO of Apple. Does Apple see something coming? Apple took 600 yuan off of the price of its top line iPhone 13 Pro series, and that was a rare sale between July 29th and August 1st. That according to Bloomberg. Joe, on our way out, is there anything that you want to give a call out for? Any ideas that are working for, or just do you want to give a call out to Exploration Insights?
Yeah, I mean, Exploration Insights, a weekly newsletter, subscription based. But I would say that right now, what we're seeing is a few projects, companies, especially in the gold space, getting financed, even in this market, even during the summer. So there is a demand for the good projects, let's say, and the ones that can get funded. A lot of that seems to be in Canada and the States and that. But I think there is more money out there for this critical minerals right now, and we might see that progressing through the year, especially as we get back into out of the summer doldrums. We might see some money coming back into the market.
Follow me at Michael McCrae. That's McCrae with 2 C's. Paul is at Paul Harris Gold. Joe, how would you like people to get a hold of you?
Either through the website or at Joe Mazumdar on Twitter, and I'm on LinkedIn as well, where I just posted a site visit I did to the Yukon. So if they want to check that out.
If you like what you hear, tell a friend. Don't forget to subscribe. On behalf of Paul Harris, Joe Mazumdar, and myself, have a pleasant weekend.